Hi, everyone. Thank you for taking your time on an afternoon to attend a CPD session. This is only on a special invite. We've only invited a few special members, for this CPD. Our regular CPD time is obviously Fridays at 2 p.m. This one is more a special one. So go to uLawPractice.com/webinar, and you can register for those CPDs. And you can enjoy free ones from us. Today's topic will be Disbursement Demystified. We're going to talk about disbursements in great detail, and we'll also showcase our product and see, hey, why disbursements is important to your business and how you can actually do that. So to start off, I'm kind of going to get into the flow of our software right here. We'll kind of create a client and create a matter, and then we will talk a little bit more about disbursements and then come back to it. Now, if you have any questions, please use the chat window. I'll try and answer most of it, during the presentation itself. It is 1 hour accreditation, and we'll keep it to a little bit more than an hour because I am giving a little bit of an introduction. So let me create a new client and a matter, and then start introducing you to the disbursement. So in uLaw, when you log in, you end up on your what we call the dashboard screen. The dashboard kind of gives you various things like pending invoices, these are things that you need to attend. For the sake of this CPD, I'm going to create a client, and we'll just focus on disbursement. So I'm going to add a new client. Let's say this client is Adam Silverstone. I'm going to save. What I'm also going to do is I'm going to open what I call a client lifecycle, template. And the reason why I'm going to do that is because I want to showcase you where disbursements actually fall in the whole realm of things. So if you actually look at your client lifecycle, you obviously meet and greet the client, and then from there, the next step is you kind of take it to the next step, which is basically you kind of create the contact, and that's exactly what we're doing right now. So as part of the creation of the contact, right, Adam Silverstone, you'll be taking his company, maybe it is AD company, his profession. Very important aspect is picking up the source of contact, how he came to you. Was it a legal aid or other program, referral program? You know what, for this one I'm going to use as if he came from Google, right? You advertised on Google and he came to you for that. Take his address. Let's say it is 81 King Street. Let's say he's from Ottawa, Ontario, right, and Canada, right? So there's an intake process. So if you kind of go through our chart, there's a source of contact that the Law Society wants you to capture, which you have captured here. There's a client detail that you need to capture, and then, you need to perform conflict screening. So let me come to that in a second. So you kind of save, and then you move on to performing conflict screening. Now, conflict screening is a process where you're identifying if you've represented this client in the past, or if this client has been in an opponent situation, has he been any other party. So that's what we're trying to identify. So let me click on Action and do a quick conflict screening. So when you do conflict screening, what's expected of you is to do searches, do searches in your files, do searches in your directories, computers, softwares like ours, practice management, to see whether Adam Silverstone is someone whom you've seen in the past. And now this is a great example, right? Adam, you've seen several Adams. You've seen Adam Pacman, Adam Sandler, Adam Brown. None of them match with Adam Silverstone, which is good. But you also have seen several people with last name as Adams. Is that a clue to some kind of conflict? No. You have people like, Silver, who are matching, in the last name. So that's kind of highlighted here. The most, important one that I feel is names that sound similar. Maybe you had a typo, look at that, DDAM and Adam, or just one spelling off. It kind of brings that out, right? So you got to do conflict check as part of your intake process. Now, the next step after you've done conflict check is, creating a matter. So let's go ahead and actually create a matter. So we'll say create a matter for this Adam. And we got to now focus on a few things with respect to creation of a matter. So in the creation of the matter, you got to verify that your rates and your client ID verification by bylaw 9 is actually done properly. So let's do that. So, I'm going to create a matter. Let's say this one is Adam versus Steffi. And I'm going to make this like a simple small claims matter, right? And I want to make sure that, I want to charge like, say, $200 per hour, right? My assistant rate. Make sure that the tax rates are set up. Code file numbers, if any, right? Like you can put that and hit the save button. So as per the guidelines, right now, like, we are at this stage where we have created a matter. Now, the matter has to have some unique things. Like, for example, it has to have a unique file name, right? You have to maintain the life cycle of the matter. Is it active, closed, archived? You need to maintain a life cycle of the matter because these are things that the Law Society actually audits you for. The next step is client ID verification. Now, the client is at your doorstep. You created, his contact. You've created a matter. You want to kind of create, a client ID verification. Let's do that. So let's do client ID verification. I'm going to get to the CPD of disbursements pretty quickly. I'm just trying to showcase all these things as part of the life cycle, okay? And then we'll get into depth of understanding, disbursements better. But as you see here, this is a form straight out of the Law Society's template for bylaw 9 for client ID verification. Driver's license or passport is a very popular one that you can actually have. Like, you can either take a birth certificate or a driver's license, like, mark that. And make sure you actually print this and save this copy because this is very important. So we kind of have gone through in less than a few minutes, meet and greet of the client, taken all his information, create a matter for him, done that, set all the rates. Let's do a quick conflict screening document, okay? We did the conflict check, but we also need to have a proof that how we resolve the conflict. So that's right here, as you saw, like in the matter, I created a conflict screening document, okay? Now, we strongly recommend that you create a vault, create a vault for this client and start storing them, and uLaw also supports that. We support several documentation, features, we integrate with Google Drive or OneDrive. So similarly, whatever you want to choose, you can choose that. And then this is a standard conflict screening form, who took the call. We fill in most of the stuff, but you can say, hey, it's a new client, steps taken, there was no conflict, retainer was not declined, and, and it was not referred to any committee or anything like that. So you can just do that. So once you've done that, now comes the next logical step of taking the retainer, right? Let's take a retainer. So in uLaw, you would go to Disbursements and Retainer, and you will click on what we call the New Retainer tab. And I'm going to assume a large retainer here, and it's very relevant to CPD, and I'll tell you why. So, we did that. Now, retainers can be collected in the form of other payments like credit card. You could click here and collect it as a credit card, but make sure that your credit card company is trust compliant because, if the guy is paying you $1,500, you want that entire $1,500 deposited into the trust account. You don't want, them taking away commission straight off your trust account. That's not allowed. So make sure you're using trust compliant companies. In Canada, Monatis is a trust compliant payment collection system. Pivotal Payments is another trust compliant payment system. And also TD Bank. TD Bank offers you a very trust-compliant system as well. So, make sure that you use them and not people like Square. Square is not trust-compliant. They directly take the commission straight out of the processing fee. So that's not correct, right? So make sure that you give them a receipt, right? And you apply. So and make sure you enter details. For example, if it was a credit card payment, then you want to enter, the credit card number, received from, and enter apply here, okay? Now let's switch gears into our CPD. So we kind of reached a stage where we've kind of got the retainer. Now it's time for us to really do the work, and we want to kind of put into context what disbursements is all about, and then try and play with the software to understand disbursements a little bit better. Okay. Now, what are disbursements? How do you manage them? That's we're going to talk a little bit more detail about that. Okay. Like, the most important question that we're going to answer is, can we use trust account to actually do disbursements, and what are the key benefits? Okay. By the way, my chat line is open, so at any time, if you want anything, just go ahead and type stuff in the chat window, right? I've given all the audio bridges, right? So go ahead and use the chat window for that. And but this is something that we will delve a little more deeper on trust account usage, for disbursements. Why is it important? Now, not all times trust account is possible. There are several times where you have to use your general account, maybe your business credit card, and I've seen several cases where people are forced to use their own personal money. It's not even a business money. How do you account for that? We'll talk about that. We'll talk about different types of disbursements, disbursements where whatever you got charged, you're passing it exactly to the client. Those are called billables or actuals. We'll talk about unit rates, how do you charge your photocopies, faxes, which are not something that you charge on actuals, but you say, hey, 5 photocopies, 50 faxes, how do you charge that? We'll talk about mileage, travel time. We'll talk about recovery of expense. It's one of the most least understood concepts in disbursement, and this is where we find a lot of people commit mistakes. And then we'll also talk about outsourced, and we'll also talk about prepaids. Okay, we'll talk about different flavors of this disbursement here. Now, coming to the dictionary definition of disbursement. What is the dictionary definition of disbursement? The dictionary definition of disbursement is an act of paying out or disbursing money to on behalf of a client. You're basically doing this on behalf of a client, and now there's a process of recovering it. Okay, now, going beyond the definition, if I look at it in layman's term, it's basically expenses incurred for your client by your law office. That's the key element. It's expenses incurred for your client. Disbursements are not like things like rent and buying stationery, right? It's like these are expenses that you incurred because you are doing a matter. And that makes more logical sense that when you enter disbursements, you would actually do it in the matter, not in accounts. It's not an accounting function, I say. It's more a matter function where you're actually doing it in the matter, because as clearly the definition says it, these are expenses incurred in your client in the matter. Okay? Now, in accounting terms, you're basically recording your expenses and your recovery. So basically, which comes first? Obviously it's expense. You have to spend so that then you can invoice and then recover it. So there are 3 steps here in accounting terms. 1, recording when the expense was actually made. 2nd is actually an act of invoicing where you tell the client that, hey, I made this expense on your behalf. And the 3rd is where you actually get paid for it. He could directly give you a check and you can recover that money in general. Or you can say, hey, you know what, I have money in trust that I can actually transfer. So in accounting terms, this is broken down into 3 parts, recording when you spent, invoicing to tell your client, and the last one is the recovery of the expense. Okay. Now, some of these steps can be collapsed, and we'll show you how, especially when you do it out of trust. And the last one, what is it in terms of law society? In law society terms, when they're coming for auditing, disbursements means they want accountability. They want proper books. They want you to make sure that you have it in all the stages properly marked. Okay, so we looked at the disbursement definition. We looked at layman's term, accounting terms, and what does it mean to your business? It means a lot to your business because if you don't do disbursements properly, you're basically taking a hit and it's a loss in your business. Okay, let's go to the next step, which are how do you do it in trust? And why should you do it in trust? Now, as you saw in our example, right, clearly the client paid us, money in trust. And, there's money sitting in trust account for this client. So let's go there and see that this client has paid us $1,500. It's sitting in trust account. Now, then there is an expense for him, if you actually do it from the trust account, it's like as if you're taking his money and paying it just on his behalf. So the accounting gets very simple. All you need to do is just show that the money is leaving the trust account and it's less than the total retainer that he has given, and that's what you're doing. So let me show an example. Let's say there's a court fee. Add a disbursement and you're paying it from trust. You can say, hey, this is check number 566 that I'm writing. It's for $75, and it's a court fee, and I'm writing it to Brampton Courthouse, right? And it's going out of my trust account. So for this matter, Adam, Mrs. Steffi, I need to pay the Brampton Courthouse $75 on behalf of Adam, and I'm paying it straight out of my trust account, and this is my check. And you can even print the check. Now, how simple that is. You're kind of done with disbursements because you used Adam's money, which was sitting in trust account, to pay the Brampton Courthouse, with this check. And I'm just printing this check, right? And I'm actually done with accounting. That's it. So that's why we strongly say when it's time for disbursement, think if it can actually be done from trust account, right? So if it can be done from trust account, there's a huge benefit to it because the amount of accounting procedure, amount of mistakes you can make, everything gets dramatically reduced. Okay. Now, the key step is whether it is trust account or general account, you need to record how it was paid, to whom it was paid, and you got to decide a few steps. So in this case, for example, we kind of, when we entered a few things, we entered the date when the disbursement happened. We entered the amount. We captured the method of payment, the check. We captured the description. What was it? We captured who it was paid to. So we captured quite a few information without us knowing, in this single screen. And that's exactly what the Law Society is actually looking for. They want you to make sure that these things are captured. So record when the disbursement was paid, how it was paid, what was the reason for the expense, right? Record the client's name and the matter that the disbursement was paid to. Now, in uLaw, when you do it on the matter, it kind of automatically does it. I do have a question here. Can you elaborate on electronic check? Okay. Now, what softwares enable you to do is if you purchase certain kinds of checks, like for example, checks that are certified with CAN-Pay standards, Canadian Pay Standards, what the software can do is it can kind of generate checks as a A4 that you can just run the paper through your laser printer and you can get it printed. Like for example, the check would be here, and your remittance would be here, and the third remittance would be here. So I do see something is wrong with your phone connection. Is the audio choppy? I'm not so sure. I am getting feedback from our support staff that everything, was okay. Anyway, so if it's choppy, do let me know, and I'll try and correct myself. I'll keep my phone a little bit further from my computer so that, it's clearer. Anyway, so coming back, so the question was about electronic check, and the answer is absolutely. If you have softwares that can print checks, it's even better. You save more time. You just run your check through your laser printer, and you kind of have it right here. Okay. So hopefully that answers your question. So going back, so these are some of the most important stuff. Now, we kind of showed it from trust account. You saw how simple it was. If it was from general, how different it is. Now, in general, you still have to do the first step, which is record the disbursement, right? Now, what you need to decide in general is you have to decide what portion of what you actually paid for you need to invoice. Like, for example, if you spend $100 for him, you need to put that in an invoice as well so that the client sees that. And once, you put it in the invoice, you want to do a pre-bill, make sure that you're happy with the taxes and all that stuff, everything is correct, all the information is correct, then you invoice it. Then the next step is recovering it. Recovering means getting paid for it. Okay, once you get paid for it, you have to record that as a recovery, and that completes the cycle of disbursement. So in trust, it's all about writing one check and you're done. In general, there are 3 steps. One is recording it. The second step is invoicing it. And the third part is recovering it. Okay? Now, why do we recommend to do it from trust? It's actually a KISS principle. Keep it simple, right? Simply simple, right? Court fees or other kind of fees where they accept checks or they accept other kind of fees where you can pay straight from your trust account, we strongly recommend you do it from your trust account. When paid from trust account, you don't have to do any recovery. You have no headache of reaching your client and say, hey, you know what, I need, raising an invoice and tracking. You don't have to do any of that. First of all, it's not your money at all. It's sitting in the retainer, so might as well use it and pay it straight from trust. That's why, the big advantage is of paying it from trust account. Now, there are several reasons why you may not be able to do it from trust account, okay? And those are the places where you lose your general, business credit card, or owner's pocket. And in all these 3, you want to make sure that you capture it very carefully. Because in the first one, if it's general or business credit card, all you need to do is you need to make sure that you record it, invoice it, and recover it from your client. If it's owner's pocket, you have one more step, which is after recovering it from the client, you need to pay that individual, who paid for it. Like, if it's you who paid for it, you need to take that money out of the business as well. So there's like a 4th step. So things start getting a little bit longer in the life cycle when you kind of get into the area of doing it from the general account. Okay. Now let's move on to the next. When to recover a disbursement. If it's not done from trust account and if it's done from general, you cannot recover it without raising an invoice. It's a mandatory step. It's a very important step, and it cannot be skipped. Okay. Softwares like uLaw will not even allow you to recover if you have not, invoiced yet. Okay, and that's where the key difference is, right? Like, when it is trust account, you just did it and you're done with it. When it's general, you have to raise the invoice. Now, generally, we recommend when you raise an invoice, give yourself like maybe 24 hours because the client might have some form of a dispute or something like that. So send it as an email. Put yourself as a reminder saying that, hey, tomorrow I'm going to do that. But, if you're already confident with the client that, hey, you know what, this was something that I already negotiated in the retainer, you can go ahead and transfer yourself. But the key step is raising that invoice. Let's kind of take that as an example. For example, I'm going to do this exact same court fee as if I was paying it from general. So I'll say, add new disbursement, paid from general. I'm going to put the same court fee example, right? $75, right? I'm going to say it's tax exempted, right, because there's no tax. And I'm going to say I paid it from my general account, and I wrote check number 567, right? I paid it to Brampton Courthouse. So it's the same information that I'm recording, but here clearly instead of trust account, I'm now saying, hey, I'm actually doing this check, which is then 567. I'm actually doing it out of my general account, not my trust account. I hit the save button. The electronic check still remains the same. The recording still remains the same. The act of sending the check to Brampton Courthouse still remains the same. Everything here remains the same, but the money has left your business and you've not got paid for it. Okay, that's the only difference here. So that's your electronic check. Okay, and let's actually try and recover it. Like, I have money sitting in trust, and I can say action, trust invoice payment transfer. I'm saying, hey, I did the disbursement, pay me, and look, the software says you have nothing. You cannot pay yourself. The reason why you cannot pay yourself is because you haven't invoiced yet. So that's the key difference. In trust, the money went away straight from the trust account, but here the money is still sitting in trust, right? If I actually hit a question mark here, the money is still sitting in trust. It left your general. You cannot recover it till you've raised an invoice. Let's actually go through that procedure of raising an invoice. Document generation, invoice complete. Notice that uLaw will not allow you to raise an invoice. The reason why we don't allow you to raise an invoice is because we want you to do a preview. It's a very good habit to do a preview. Make sure that you're happy with the invoice before you actually raise it. So in this case, I just generated a preview. Let me have a quick look at it because I want to make sure that everything that I want to put in that bill is all correct. So that's my invoice. It has only one line item, which is the disbursement, $75, and it's telling me like there's no tax on it, which is good. I've verified everything. My date is correct. My items are correct. And the next page actually tells me, my retainer. Obviously we duplicated the court fee, for example, but and if I look here, it tells me like, hey, if I withdraw both this 75 out of trust, it's already gone, and this other thing, that's my balance that's left in trust account. So I think everything is good with respect to the invoice. Let's go ahead and actually now raise an invoice. So this time, it allows me to raise an invoice because I did the preview. I'm going to mark it as paid, basically, because I know I'm going to pay myself. I'm not waiting for him to give me a check. So let me do that and download the invoice. Now, this is where our first example of getting the retainer really helped. Now, it's an expense you did on behalf of the client. You're not waiting for him to actually pay you, right? You have money sitting in trust account that you can actually do. That's your real invoice, right? And it tells him everything is paid. So, the client treats this invoice and says, oh, everything is paid. I don't have to do anything. You, on the other hand, can go and click on the question mark and say, oh, $75. I need to move that from my trust account to my general account and pay myself. That's the third step. So you saw you entered the general disbursement, you raised the invoice, and now you can have the transfer. Okay? Now, generally, you would not raise an invoice just for one disbursement. And this is where, again, you've got to be smarter here. You kind of do your disbursements, keep your billing cycle ready so that your recovery time is shortened. You're not spending a lot of time from the time you spend the money till the time you're actually recovering it from your client. So in the recovery process, you say, hey, $75 is being transferred from my trust account to my general account, and it's electronic fund transfer. Obviously, the Law Society wants you to put the electronic fund transfer requisition number, right? And then you will hit the transfer button. So that's where you're actually paying yourself and you're recovering, the amount that was being paid from trust account. Now, very important to generate a Form 9A because it was electronic fund transfer, right? So you'll do that. So in this case, this is a TD Bank, and I can, give my trust account. My general is also TD Bank, and I can do my general account. And, uLaw already fills out, it's a Form 9A. It fills in the requisition number and the date, and you just hit the download button, and that's your requisition number. So Form 9A pretty much filled out for you for that disbursement that you transferred from trust account to general. So as you saw, in general, there's a lot more work that you need to do for the exact same code fee. So think about it. It's a great thing to think, okay, where does the requisition number come from? That's a very good question. When you actually do a trust transfer in the bank and you complete the electronic trust transfer, the bank will give you that number. They will give you it depends on the bank. Most of the banks will give you a E blah, blah, blah number. Some of the banks will just give you a 10-digit number. So it all depends on the bank. So the bank that you're using when you're doing an electronic fund transfer from trust account to general, when you complete and hit the submit button, will give you that, and then you just transfer it here and, in the software and just put it here. Great question. Thank you. So let's now go back and relook at our slide. So, we kind of raised the invoice. Before raising, we did a preview, made sure everything was good. Then we got paid from trust by paying that. Now, one key element is we had money in trust here. So that's why we did a trust transfer and paid ourselves. Now, if money did not exist in trust, now you're waiting for the client to actually send you the check or pay you with that credit card for that $75. Now, when you don't have a retainer, you're really walking on you're treading on, very risky lines here because the client may not pay you. And, and so we strongly recommend, first thing we recommend you get a retainer and pay disbursements out of trust. But if you don't get retainer and if you do disbursements, you're actually waiting for him to pay so that you can recover it, okay? If it's paid to you, if now the last part is if you paid for it from personal money, like, you need to pay yourself. I'll show that in the next example. If you're not using software like ours, you need to create ledgers and journals as per the Law Society guidelines. And let me show you some of them, how those journals will look like and how the ledgers will look like. I'll show you a standard ledger, how it's supposed to look like. If you're not using software, you can use things like Excel and store it. But, a Law Society ledger for trust will generally look like this. Okay, I'll just show it on screen, but you need to print it as well. But, here you go. You need to capture who's the account, what's the matter, and what's the file number. You need to capture that. Next thing that you need to capture is the date when those things happened. You need to capture particulars, like, was it a retainer, what was it for, what was the payment type. You need to capture all that stuff. You need to capture whether it was a receipt or an invoice or a disbursement, and then, you need to capture, the balance in trust as it's going on. So let's walk through our example so far. So on 18th of October, we got a retainer from Adam for $1,500. So that means the balance in trust at that point was $1,500. Then a little later, we put that disbursement straight out of trust account. It was a check 566 that we wrote, $75. That brought the balance in trust for this account down by $75 to $1,475. And then we also, in the same example, we put a general disbursement and we transferred $75, right? And that brought the balance to $1,350, and that's what the balance is. So this is a statement of ledger that you need to capture for trust account. You need to capture a similar one for general accounts, and I'll show you how that looks like. General accounts ledgers are going to be a little bit more complicated than the trust, but let me open the general ledger here because they have more data than this. So in this case, hey, this is the disbursements that you actually recorded to your client, $75, and that's your trust transfer payment, the payment on the account, bringing the balance to $0. That means, when you raise the invoice, you had an outstanding of $75, and this is where you actually got paid. Okay, so this is what, these are the two ledgers that you need to maintain. I'll come to journals and all the compliance in the end, when we talk about it, but I just wanted to bring you up to speed. These are some of the documents that the Law Society expects you to maintain as you're doing disbursements and recovering them. Now, when you use softwares, those come for free, basically because they automatically get generated. You don't have to worry about it. Okay. Let's move on to an important topic of types of disbursements. Okay. We already talked about billable. I'm not going to spend a lot more time on that. Billables can be done in both trust and general because they're actuals. What you spend is what you're recovering. When situation is, what you spend is what you recover, it's pretty easy. Okay. I have a question online. Let me go there. It says, do you have to save these reports? Not on a daily basis. You need to obviously do them on a monthly basis. I'll come to that in the end. It's a great question. When I segue into the last part for compliance, I have a chart very specifically talking about compliance. We'll come to that. Absolutely, yes, you need to record these ledgers, but you don't have to do them on a daily basis. You need to do them on a monthly basis. You know what? You don't have to do it. It could be an admin who can do that, or your accountant can do that. He or she can generate these ledgers out of any software or any process. Okay, it should not take more than 5 to 10 minutes. These are, if done properly in software, and I'll show you at the end of the demo. I'll behave a month in and show you how to generate these reports. It's not that hard. Now, let's talk about types of disbursements. We talked already about billable. Billables are what you spend is what you're charging, okay? It's actuals, it's very simple. Unit rate. Unit rates are basically where you're charging the client by units. So let's do that. Now, unit rates cannot be done from trust. They can only be done in general, okay? Same thing with mileage and same thing with travel time. So I'm going to take all these three things together and show you all three examples, okay? So the way you would do unit rate is you would say, add new disbursements, paid from general, and you would say what kind, like for example, fax. When you say fax, it automatically becomes a unit rate. You say 20 fax at $1 per fax, and then you have to put HST on top because that's how you can charge the client. And you can uncheck this and say, hey, you know what? This fax was done inside the four walls of my law firm. I had no expenses, for that, and you can save. So that means you're charging the client $20 plus HST, and you spent no money to do that. So that's, in some angle, that's a profit. You can actually look at that as a profit. Let's look at mileage as an example. Let's say, the court was actually in Kingston, and you're in Ottawa, and you have to travel 200 kilometers. You could say, rate from general, and you can say mileage. Now, mileages have different rates. If it's an assistant travel mileage, a lawyer travel mileage, paralegal travel mileage, each rates can be different. So you can just say that, and this one is like, say 65 cents a kilometer. That's what you negotiated with him. And you traveled 50 kilometers, one way. That means 100 kilometers. You have to put HST on top of it. Again, you can uncheck expense. Now, the reason why we have expenses there is because, let's say there was a gas expense, you can report that here. Okay? But it's not mandatory. If you did not have any expense, you just drove and came back, and you report gas expense separately, you don't have to do anything here. You can just hit the save button. Okay? So we already showed two cases. One is a unit rate, which is charged on time, and another one is a mileage that's charged on miles. I traveled 100 kilometers at 65 cents. Is one way to do that. You have to record. Let me look at that question. Do you have to record when you take the money from general account? Now, in these two particular examples, you did not take money from the general account. Absolutely, you did not. Basically, because when you faxed, there's no general account that you withdrew money from you. It's just an act of fax, and you're charging the client. In the court fee example, absolutely yes, you have to record that. You saw that the date. The date here is the one that tells you when the expense was actually made. I'm going to show you another example later, which is recovery of expenses like miscellaneous, where you will record that. Okay, it's very important. Date when the expense was actually done has to be recorded as part of that template. Okay. Again, I want to stress, in these three types, unit rate, mileage, and travel time, we call it general, but general is actually optional, basically because you might have not spent any money there, right? But it's not trust. We still call it general because there could be dollar value spent, there could be no dollar value spent. Okay, so that's why these three things are absolutely out of general. So let's look at travel time. Same concept, right from general, and you can say travel time. Assistant travel time. Now you don't report now in units. But you report it in time. You can say, hey, you know what? This was a 36 minute travel, right? You can just do that. And it's a 0.6, and you can say, hey, it was at $100 per hour travel kind of stuff, and you can again put the save button. So again, there's no money that was spent here. So these three kind of disbursements are pure profits, right? You're just charging the client, and you're going to recover that money. Okay. Let's now move on to what we call the recovery of expense on actuals. Okay. This is both trust and general, and we already talked about that. And then recovery of expense with pure profit margin. When you have profit margin, that means what you spent is different from what you actually recover. You have to actually do it out of general. You have no choice but to do it from general. Okay, there's again another question. I'm really liking this. It's very interactive. I want to thank all the people who are participating in this and giving us a lot of questions. Sorry, I was thinking about when you're paying yourself. Absolutely. When you do yourself a trust transfer, we already saw that in the example. I can go to that again. If you notice, the trust transfer, I'm just going to pull that out because the question was asked. I'm going to pull that form again. If you notice, the date was right here when you actually did the trust transfer. And that needs to be recorded in your Form 9A as well. The Form 9A as well needs to have that date of transfer. If you look here, the date 18th of this, when it was actually performed, needs to be there. Okay, so it has to be captured. Everywhere there's an accounting transaction that happens, date is mandatory. You have to capture that. So let's get back now so we kind of did these three. Let's move on to the more complex one, which is where what you're charging the client is not matching what you are actually spending. Okay, so this example is a great example. So you can say, add from new disbursement. Notice that I'm not going to do this call from general. I'm going to do from miscellaneous expense. Now that's my favorite of all the disbursements. I'll tell you why. The reason why is because it separates what you charge the client and from what you actually spend. Now, this is very clear, in my opinion. This is like crystal clear. I can say, hey, this is the date, when this expense actually happened. Let's say it happened on the 16th, and I'm going to say it was like some software purchase, right? We had to purchase some litigation software for this one, and the software was $100. That's what I'm charging the client. Now, the bottom part is where you tell in general how you paid for it. If it was $100, it's very simple. You just say 100 and look, both of them is 113 and 130. What you're charging is the same. There can be scenarios where this may not be the same as that. For example, you can say that, I'm charging you $100, but you know what? I got a $25 rebate. I'm not passing on the rebate to you. I paid only $75. The original charge of the software was $100. Maybe they had like a Christmas discount or something like that. So I got it at $75. I'm not passing on that $25 to you. You could do that. You can only do this in general. You cannot do this in trust. You can only do this in general because the expense amount is different from what you're charging. There's also other funny things. For example, maybe, I'm going to make this again 100. Maybe there was a surcharge. Maybe this was a U.S. company, and they put a surcharge on you. And it's not ethically correct for you to pass this surcharge to your client. And you can say, yes, that's a disallowed expense. I can say, hey, you know what, the $10 customs charge they put on me or some levy, I'm not passing it to you, right? That's this time you're taking a hit. It's opposite of the previous example. Last time you were in profit, basically because you paid less, but you're charging the client more. In this scenario, because you're trying to be nice, you're not passing on certain charges, you can say, hey, I paid $123, but I'm only passing you $113 because that's what is 100 plus HST is. So the rest of the information still remains the same. You have to tell the general account how you paid for it. Maybe you paid using money order, right? And then it was paid to, I don't know, I'll just say D2 software litigation service, right? It is litigation software that you bought, right? So this part remains still the same, right? But you get an option to actually vary this with respect to that, okay? Now, if you watch the 4 cycles, right, where you captured your expense, this is what you're going to invoice, and this is what you're going to recover. Clearly, you see now the dollar amounts are not matching. That means you're either making a profit or a loss, right? It's very clear. And this is where the accounting steps start getting very important. It starts getting very important that you capture what you actually spend, what you actually invoice, and what you actually recover, so that at the end of the day, if you're analyzing it or understanding it or showing it to a law society auditor, you can explain the situation in a few seconds and not take several minutes where you're scratching your head to say, I'm not sure what I paid, I'm not sure what I invoiced, I'm not sure what I recovered. Here it becomes very straightforward and very simple. So I actually recommend even billables and normal actually use what we call the miscellaneous expense form because it's much more clear than paid from general. Paid from general, the fact that it hides the actuals, it makes it a little bit more complex. The other thing I really like about miscellaneous expense is the tax is explicit. It clearly tells you in the miscellaneous expense, how much was the tax. It tells you, it doesn't show you any percentage. It tells you the exact amount. So it's very clear. So if you have a receipt right next to you, you know that the amounts are matching. So, this is very clear. I'll just quickly hit the help button just to show you, what it is. Here's an example of Disbursements. So how much do you want to charge the client? That's what you do. You enter the date, you enter the reason, for example, Disbursements, this, and then you enter the amount, and it calculates the HST. The bottom portion is actually telling what cost did you incur. Leave it empty. If there's no cost, leave it empty. If you did not spend a single dollar, but you're still charging the client, leave it empty, right? And that's where this miscellaneous expense screen becomes very powerful, right? but you mandatory to report method of payment and all that stuff. All the other fields are pretty much mandatory to kind of implement. Okay, I'm going to close this. So go back to my slides. So we've talked about recovery of expense with profit margin. Okay, and now let's talk about outsourced expenses. Okay, now what is outsourced expenses? Like, there was a court case that was in Kingston, and you really did not even travel to Kingston because it was too far. You got some other agency to represent for you. And this might happen a lot of time. Like you might be using the same agency again and again and again. You want to capture quite a few information very, very simply with few clicks to say what it is. And I'll show you a good example. Let's say I have an agency that I use all the time whenever there is it's a law firm called John's Law Office. I use John's Law Office all the time, to do my work in Kingston, and they represent for me, and I charge my client. Okay. First of all, a little bit of accounting knowledge it will be helpful here. So under the expense category under accounts, right, under consultancy, you can create, several other consultants. Like, for example, I created Megan Consultants, John's Consultants, some outsourced paralegal company. You can create all these companies there, right? You can say, hey, these are my consultants that I use all the time. Now, what happens is, as you're marking expenses, the expenses get divvied up and they get parked in these containers. So that means at the end of the day, or at the end of the month, or at the end of the year, you can say, hey, how much money did I pay John? How much money did I pay Megan? You can find that. So let's go back and do that in very few simple steps. So when you click on Add New Disbursements here, you can say it was a consultancy expense. When you say consultancy expense, again, the date is very important. You can say consultancy expense, how much are you charging the client? Let's say $200, flat rate. You say, hey, this was a court visit, and I'm charging $200, right? The bottom is where you report, okay? You can report $100. Maybe there was a tip or something like that, in this expense that you don't want to pass to the client. This is completely independent of that. This is $226, and this has nothing to do with that. And here you can say, hey, that was John's Law Office. This is their invoice. I'm just paying it, right? And paid to John Law Office. If I can type today and get my spelling correct. How did I pay for it? Maybe you used your credit card, right? A business credit card. Here you go. And you can put the reference number and hit the save button. So that's a classic way in which you can actually, put consultancy expense. Now, one key element that I did not show, and I'm going to show that in my miscellaneous expense, is if you notice here in the miscellaneous, the software purchase, I said I was paid from my general account. What if it was not paid from my general account? It was actually paid by me from my pocket. All you do is you can say here, cash account, and you can say owner's pocket, or maybe your assistant's pocket, Campbell's pocket, or Fred's pocket, Amanda's pocket. You can create personal credit card. You can create a lot of these categories, and you can assign it there. So what happens is now that account is actually marked with that. So at the end of the month, you would have accumulated enough dollars in owner's pocket, and you can pay yourself as a draw and say, hey, you know what? The business owes owner's pocket so much money because of disbursements that he did from his credit card, and here is the dollars, right? You could do that. So we kind of covered billables, unit rates, mileages, travel time, expense on actuals, right? Expense on profit margin. This is a miscellaneous expense, my favorite. Outsourced consultancy on actuals, where both of them, the top and the bottom, are exactly the same. And now, again, consultancy could also be done by trust. You could just say patron trust, and that's what it is, right? You can write that check straight to John's Law Office. You could do that, okay? Now, the last part is consultancy with profit margin, okay? Can you get back to disallowed expenses? Absolutely. Okay. Now, disallowed expenses can be a little bit confusing. Let me get back to that. Now, disallowed expenses are what you determine as non-taxable portion. Like, for example, in this case, John charged you $100 with HST, but there was a $10 surcharge that he charged, which is not taxable. And that's what you put in disallowed expense. Disallowed expenses are expenses that are not taxable. Like, look at it like a meal. A tip in a meal is classic example of disallowed expense. A surcharge, or some kind of those kind of charges, that are not HST-able are what you actually, try and put in your disallowed expense. Okay. Hopefully that kind of answers your question on disallowed expense. Okay. Now, disallowed expenses can be captured in either kinds of disbursements, like either it is miscellaneous expense or consultancy. Okay. Both of them have that concept. Okay. Now, the last one is a variant of miscellaneous expense. Okay. I'm going to show this. Now, this happens a lot in real estate. Okay, or even other places, like where you buy bulk of software and then you distribute it. These are called prepayments. Like, now, prepayments are, I have established relationship with, say, Teranet or TerraView or other software who charge me bulk. Like for example, I buy 20 licenses of search in February for doing searches for title searches or something like that. And I have no clue when I will be using those. So what you can do is, it's a little bit of a complex disbursement, but it's very essential, basically, because you need to reconcile your general at the end of the day. Rather than marking them as in matter, the initial prepayment, okay, that's marked as a business asset. So you can say, hey, it's a prepayment, and you can say, for example, I created an account here called TerraView. Right? You can just say TerraView process server is another classic example. And I can say, hey, at $50 per search, 10 searches were purchased at $500. Actually, $565 to be precise. Because searches can have HST. Okay, this one I'm going to assume it has HST. So $565 to be purchased. And that was a check I wrote to TerraView. That's a check I wrote to TerraView to buy that, $50 per thing for 10, 500 plus 565. So this was entered, and the check was returned to TerraView, and the whole exercise was done. Now, you did not even know when you bought those 10 search licenses which matter are you even going to apply them to. Now it's the time when it's actually time to apply them to the matter. You can now say, add new disbursements, prepayment to disbursements. That means like you're transferring it from prepayment to disbursement. You can say, hey, this was a title search. Fee, $50 plus HST. So only 1/10 of it is being charged to this client, obviously because only one search is applicable for him. And here you can say $50 is being transferred from my TerraView. Out of the $565, only $56.50 is being transferred as an expense, okay, and it was paid to TerraView. So you paid for it in bulk. One of that got transferred to this client. You can express that. Now, similarly, you can go to other accounts, other matters, like, this is Adam Silverstone matter. You can go to another matter and transfer another bulk, another thing, another. So you can keep paying yourself from your prepayment. And when you look at your prepayment account, you'll kind of know how much you're detecting from it. Let me quickly go to the TerraView account, and you will see what's the balance on the TerraView, right? If you go to my prepaids and deposits and I go to my TerraView account, it should now tell me like, hey, I paid for $565 and I've, detected $56.50. And, obviously I have a lot of examples here, so it can be a little confusing that, TerraView has so much balance, which is possible. But it kind of gives you a feel that you can kind of park your asset pre-purchases, in different categories and transfer them to disbursement. Now, it's a very complex disbursement, not highly used by other areas of law, very heavily used in real estate practice. But that's another type of disbursement that you can do. Okay. Let's now come to the last section of our CPD, which talks about compliance. Okay, what is the law society expecting from you? It's expecting that for all these disbursements that you will have proper trust ledgers and general ledger. Okay, I already showed you an example of a trust ledger and general ledger. It is expecting you that you have that. The law society is also expecting that you will have 3 kinds of journals for this. One is a general receipt journal, one is a trust disbursement journal, and the last one is a general disbursement journal. All these 3 have to be there. And I'll come to them in a few seconds, how to generate them. Finally, you have to have a fee book, because that's where you're telling the law society that you raised invoices for these disbursements and you actually got paid. So, the fee book is very essential. So, to be precise, there are 6 documents that law society is looking for just in the area of disbursements. The 2 ledgers, the 3 journals, and 1 fee book. Okay. Expense book is another thing that you can maintain. It's optional. It's not there in Bylaw 9, but it's a great document. It gives you as a business to understand what's actually happening. Okay. So that's the last one. Now, why should you do this in software? I mean, I've already demonstrated how easy it is to maintain this in software. Just imagine doing this by hand or doing it by any other means, or having separate software, one for practice management, one for accounting, those combinations just don't work, right? To me, everything has to be, you have to have a single source of truth, and legal accounting softwares are the only ones that can provide you with that. The reason why they're successful in doing that is because at the end of the day, you meet your compliance, your accountability, analytics, and ease of use. Everything is contained in that. Okay, so that's the main reason. Now, what are the benefits of managing disbursements? It affects your profit margin. It's as simple as that. If you do not manage your disbursements, where you charge your client X and you don't know how much you actually paid for it, and you did not do your invoicing properly, it affects your profit margin by huge, right? Disbursements is an area where you can actually make profits, and if you don't do it properly, it definitely affects your profit margin. So to me, it's all about getting paid for the expenses that you got incurred. It affects your profit margin. And taking the risk of paying a disbursement via general then trust is a little bit of a dangerous proposition, in its first place. If you don't have retainer and you're paying, you are now at the mercy of the client to write you that check, right? So, this is a very risky thing. I would not want to recommend you to do that. And last one is disbursements can add to your profit if managed properly. You want to get paid for those papers that you're dispersing and, those faxes that you're sending. Those are all areas where, those are small cost recoveries. They add up to your business bottom line at the end of the day, right? Finally, it's all about compliance, accountability, and ease of use. So we are about 2 minutes away from wrapping up. Hopefully, you got a good rundown of our software as well on how it is to manage. It's not very complicated, as I showed you, and, there is time. I'm going to hang around for at least another 10-15 minutes. So, feel free to ask as many questions as possible, and I will definitely, answer more questions. How to record it. Oh, you know what? I'll be more than happy to show that. Okay, now that's not disbursements, okay? That's an office expense, let me show that to you. Okay, now, the person who asked the question asked a great question. He said, hey, how do you record other things that are not related to client? Now, the way we have done it in uLaw, and most, legal accounting softwares always take this effort to do that, is they keep client expenses separate from office expenses, because the two don't have a lot in common other than this prepaid. This prepaid was the only expense that's a little bit complicated where you put it in there. Now, the moment it comes to something like that, you will go to accounts. And in accounts, there are 2 kinds of office expenses. The first expense is what we call a pure office expense. You can just say, hey, expense, office expense, and there are several categories here, right? And you can create your own categories. We have printing and stationery, photocopiers, postages, gas expense. You have it. We have it here. Rent and taxes is another category where you have reality taxes, hydro, property maintenance, service charges, Even if you want to have an explicit one, like, Minto Reality Rent, if you want to capture it, rather, because multiple properties, you can have multiple properties, you would create it under that category, right? This captures all that. Thanks for that comment. I appreciate that. You can capture hydro. Now, you also want to capture, your things like, interest, like, maybe you have a small term loan, like, bank charges. You want to capture that. Now, there are several ways in which, like, you can do that. Like, the question was about rent. So I would just say rent, the invoice that you got, okay, and you can say rent for October. You can say how much, and you can say who it was paid to. How did you pay for it? Business credit card. Enter. Done. That's how you would capture office expense. Now, office expense also have disallowed components. Like, for example, certain surcharges were not having, taxes. Meals is a classic example. So in that case, you would not use the office expense category. You would use disallowed expense category. Again, the same thing. I'm going to use meals as an example here, and I can say, hey, $100 of meals and $9 of tip, right? Like, very simple. Okay, and hit the submit button. Now, I've got a few questions here. Let me go through one by one, and I'll answer them. A question not really directly related to disbursements. How do you save personalized document templates, example, retainers? Okay, I'll come to that. I can enter any rent paid before, let's say, for September. Absolutely, you can backdate it. Okay, that's a great question. I'll come to the template question in the end. It's not really related to our CPD, but I will come to that. So when you go to expenses and you do disallowed expense or office expense, you can obviously backdate it. You can backdate it to any day before the day. Okay, and to me, it's very important you capture all your expenses in uLaw, basically because you're capturing revenue in uLaw by the nature of you doing what you do in the matter and raising the invoices. If you capture expense in uLaw, right, what happens is when it comes to the day when you have to submit your CRA HST, all you need to do is just say document generation taxes HST and go for that quarter, download, you're ready in 2 minutes. Now, I'll just get into a little bit of details on the HST. Like, when you do HST on a quarterly basis, you need to, when you look at the HST screen in the CRA website, you need to fill box 105, 108, and 109. uLaw has a video on that. Like, how do you basically do that in 2 seconds? Like, because this report, right, tells you a lot of information. It tells you, like, hey, you owe the government, that's your HST collected, and that's your HST paid, okay? And you basically, if you look at that, like, and, in our playlist under uLaw Answers, if you actually look at that, and, yeah, if you actually look at that, we have one where we talk about HST, like, what are all the returns and, how do you do all the boxes. I strongly encourage people to watch this, like, how do you do your 105s and your 108s. So, if you watch this video, you'll kind of get an idea why it's important to put your other side of your business as well. Okay, I have a few more questions. Can I enter the rent? Okay, separate question. Just wanted to know, after you do your Form 9A, then can you go to the bank to physically withdraw money for yourself for general loan? Let me understand that thing. Then you want to go physically to the bank and withdraw money for yourself? Absolutely. That's a great question. Now, the two are not related, but it's a good question, though. Form 9A is for electronic trust transfer, from transferring money from trust to general, okay? Now, when you're withdrawing money for yourself, that's called draw. That's basically what you're doing is you're taking money away from the business to pay yourself, okay? When you do that, that's completely a different menu in uLaw. Like, okay, what you're doing is you're basically telling the software that it's a capital transfer, okay? So under capital, if you look in uLaw under capital, there are two things. Like, when you're injecting money into the business, it's called capital injection, right? You can say, hey, me, Roger Moore, I am putting, $1,000 $30,000 to start my business. That's capital injection, right? Now, what is draw? Draw is basically taking money out of the business. You can say, hey, me, Roger Moore, I'm taking $1,200 out of my business. So you put that as a draw. Now, what this does is it reconciles your general very easily. Like, okay, and this has nothing to do with the Law Society does not even care about this. What this does is when you do your year-end, your month-end, and you do your reconciliation, these help you. So when you're working with your accountant, these things make it very, very easy. Like, when you do a capital injection or a draw, if you manage it in uLaw in this one holistic way, you kind of reconcile better, and you can kind of say, hey, my business has only this much cash. This is what it is, and you can be done with that. Okay, so it's very straightforward and simple, like draws and capitals. Okay. Now, let me come back to a few more questions. I'm really sorry that the sound is a little bit, varying today. Let me come back to the question about. I'm glad to see, lawyers are self-answering other questions in this forum. It's a great thing. It looks like people really understand our software and the compliance pretty well. And thank you, Winnie, for doing that. I appreciate that. There's a question about templates. Let me be honest with you. When we started this company way back in 2010, we had no templates. All these templates that you see in uLaw, like these several hundreds of them that you see, are templates that were shared by lawyers from coast to coast. People were willing to give us templates. Some of them are Law Society templates, like client ID verification, conflict screening. But when it comes to retainer, a simple template, an elaborate template, a French template, a flat rate template, these were all provided to us by people like you guys, and we templatize them, put them into the software, and it just does not stop there. We have hourly, contingency. There are more templates here, a template just for HTA, a simple retainer, a general template. We have tons and tons and tons of templates. And the reason why there are so many templates is because people like you shared with that, master letterheads, authorization letters, verification. Just you can just see the number of templates that we have. Now, if you have a template to share with us, which is different, and it adds value to the entire community, do share it with us. We'd be more than happy to add it for you, and it also becomes part of the rest of the community as well. Now, the great thing about these templates is they come with branding, and now let me tell you what I mean by that. For example, if I would do this French elaborate retainer, we brand it for you, right? We basically take your in this one, I did not have I believe I did not have the logo and the banner, but if you uploaded your logo and your banner, let me just check. In this account, I might have not had the logo and the banner. It basically does that for you. Here you go. So it puts a nice logo, a banner. It's very, very, very customized for your business, okay? So, we take branding very seriously. Even a simple retainer receipt, right? If you download in uLaw, it's a template, and it's branded with your company. So, that's one key advantage of you sharing your template with us is we'll brand it for you, and it'll have your logo and your banner. It'll be consistent with other things that you produce to your clients, right? Because at the end of the day, your clients might refer you to someone. A brand like this goes a long way for them to remember you. Okay. There were some more questions. Where do you find templates? Okay, templates are all over the place. Okay. Now, everything that you find in document generation is actually a template, okay? Bill of cost is a template, okay? Under letter and other, if you go here, you can basically, you have all these templates, okay? There's a fax cover sheet, it's available in doc, PDF, letterheads, in French, there's so many here, So let me go back to the question. So you cannot save your updated template without submit. Absolutely, that's the answer. Yes, and we are open to that. If you would give us your template, we'll be more than happy to do that for you. So I think we have covered quite a bit of ground here. And okay, the way you would get your CPD credits, there are a couple of information that I want everybody to know. The first one is I want everybody to fill this form that I'm just going to put it in the message here. Please click here and submit your record of attendance. Okay, it's very important you do that. And the second one is you go to the Law Society portal, and you will see that there will be a uLaw webinar called Disbursements Demystified, and you can take 1 hour of CPD credits. I just wanted to also live with this. Oh, that one does not open. Let me make sure that it opens. Give me 1 second. It did open for me. I wonder why it did not. Let me. Actually, the email that you would have got 4 minutes before or 5 minutes before has that link. So it should open right from there. Just go back to that email that you would have got, and it should open from there. It did open for me. I'm not sure why it's not opening for you, but I just clicked on it and it opened. So please use that email that you would have got 4 minutes before. That should have that. If it still does not work, reach out to us. We will we'll definitely work on it and somehow get it. Oh, great. If the link in the email works fine, please use that link and submit your attendance. Don't forget to go to the Law Society portal and claim your 1 hour of CPD. Hopefully, you guys found this CPD of great use, and learn more about accounting, and welcome to this new world of practicing everything on the cloud. So for people who don't know us, we are a Canadian company born out of Ottawa, Ontario. And we serve coast to coast. It's a cloud operations operating in Montreal as our data center and Ottawa as our backup. We're based out of Canada, Ontario. And we serve coast to coast from BC all the way to Newfoundland. And just visit us at uLawPractice.com. The name of the webinar is Disbursements Demystified. That's what you will find in the Law Society portal. That you want to really use. Thanks for all the questions. I do want to leave you guys with our other webinars. We have one great one coming up this Friday called Getting Ready for Law Society Audit. I really want everybody, I strongly encourage everybody to go to that one. That's a great one to go. And we also have a few more coming up later. I think the next Friday we have another great one. And that one is called Law Society Bookkeeping Guidelines. That one just focuses on bookkeeping guidelines. I'll answer one last question, and then that's it. People asked about compliance reporting. I forgot that. Every compliance reporting uLaw comes under a single click. So you just go into Accounts, Document Generation, Compliance. And these are what we call the compliance reports. The trust journals, the disbursement journals, the ledgers, and all the documents. You need to do this at least once a month, at least. I would actually start reverse. I would do the reconciliation first, then do the rest, okay? And that's how, any uLaw certified partner would do it too, or any certified people who have taken the demo with uLaw also would do it. When it comes to Law Society documents, this is the order in which the Law Society looks at it. But we look at it reverse. We want you to finish off your trust and general reconciliation first. When you finish that, the rest of these documents become very accurate, and you just keep downloading them. And downloading them is so easy. You just say download monthly. Right? You just click on this monthly button here and hit the download button. There's no rocket science here, and you just download. That's it. So you just go one by one by one, and it marks it as complete. And you just finish off all of them. Here you go. That's your client trust ledger that we did today, right? If we go for Adam, you should see, here you go, Adam Silverstone, retainer and the two, because I did not do further stuff, like, it just has that, like, okay. So you go one by one, and you just download all of them after you've finished your trust and general reconciliation. So I would generally go reverse. If there's no further questions, okay, there's one more. So can you do that after the fact? Absolutely. Everything can be done after the fact. It's just that it's going to be more work. It's absolutely going to be more work, basically because, when you're not doing things on time, it's catch-up game. And, your errors are going to be higher. Everything is going to be, much larger. So strongly recommend do this on the 31st of the month. Don't keep it for this. Everything can be done after the fact because, at the end of the day, it's all accounting. But we strongly recommend that you keep to the compliance, basically because it's not just about auditors. It's all about your business. If it was just about auditors, we would not be doing this talk, right? It's all about profitability to your business. As you saw in this webinar, the most important stuff that we stressed, right, was the profitability to your business, right? We're not stressing on, compliance is there. Accountability, analytics, and ease of use is what actually drives you to more profitable business. Okay. With this, I would like to bring an end to this webinar. Thanks for your time. It was only sent to a few special members, so, we appreciate that, people like that. We will try and organize more like this in the future. With that, I would like to call a closure to this. Thank you so much for your time.